What's going on, guys? It's Jong here, and today I want to talk about how to calculate your outgoing expenses when it comes to analysing the cash flow on your property. There are a number of costs that many forget about, and I want to cover them all here today. It's pretty easy to figure out the income side of things, generally just being the rental income. Sometimes there's two sources of incomes if you've got a granny flat, and even the complex models are pretty straightforward to calculate, such as short-term rental stays or renting out individual rooms. Although I've done some previous videos around cash flow, I'm planning to do a more in-depth analysis on calculating the cash flow position of the property. So if that's the sort of content you want to watch, don't forget to subscribe and smash that notification bell so you don't miss a video. Let's dive straight in. First and foremost, your biggest outgoing expense is going to be the repayments on your loan. These can vary pretty dramatically depending on the loan package you go for and whether you choose a principal and interest or interest-only loan. We'll take a $400,000 30-year 4% interest rate variable mortgage, and if we decided to pay P&I, our monthly repayments would be $1,909. If we went interest only, our repayments would only be $1,333. That's a massive difference of $576 per month. Although by going P&I, you are actually paying down your loan, some don't consider this to be an actual expense, where to me, it's all included in your holding costs. And on top of this, there's always these different changes like variable rate changes, the use of an offset account, and many other factors that come into play when it comes to expenses. Just remember that if you do decide to go interest only, it's only going to be for a short term, typically 5 years. And after the 5 years, you either have to refinance to go on an interest only for another 5 years, or the loan will switch over to a principal and interest loan. The second expense I take into consideration is the management costs. And this is for a typically rented out scenario. And again, the range can drastically depend on the service that you choose to use. There are self-management online tools that allow you to just rent out your property for a fixed rate or go as low as 3%. And there are some property managers that can charge upwards of 10%. However, this rate is negotiable, so I'd always have that conversation with a property manager before employing them. So let's say we had a property being rented out for $400 a week. Times this by 48 weeks, and our total rental income is $19,200 a year. We factor in 4 weeks of vacancy per year here, so that's why we don't calculate the 52 weeks of the year. And this is just a good buffer when calculating your rental income to allow for 4 weeks of vacancy. A good rule of thumb for management fees is 7.7%. So we'll times this by our $19,200, and our total management cost per year is $1,479 or $123 per month. On top of this, a monthly admin fee of say $30 should be factored in for good measure. Don't forget about property manager leasing fees, and they're generally 1 week's worth of rent plus GST, and they should also be considered alongside any leasing advertising costs. Although this doesn't amount to much if you've got the same tenant for 10 years, it does start to add up if you're changing tenants every 1 to 2 years. The fourth expense I always factor in is smashing that like button, and although it doesn't come at a monetary cost, it does take a little bit of effort to drag that mouse over and click, which if you do so, I'll be forever grateful. The fifth cost I like to factor in is the council fees, and obviously this is going to vary between councils, but the absolute minimum I'd factor in here is $100 a month. If you're not sure where you can find your council fees, you can ask the real estate agent selling the property and they'll be able to tell you, or check the contract of sale. Next up is strata. Now, strata only applies if you're purchasing in a strata building. So if you're buying a freestanding dwelling, then you can just skip this one. Again, I like to factor in at least $75 here, but strata fees can get absolutely enormous. Especially if you're paying for multiple lifts in a building, pools, outdoor garden maintenance, they all add up, and these costs can be found in the same way as the council fees before. However, some get calculated into quarters or years, so make sure that you break it down into a monthly fee. Insurances are super important to factor into your expenses as well. At the very minimum, you want to account for landlord's insurance, and this should be on top of your strata building insurance premiums. There are many insurances other investors factor all or part of into their expenses, and these include life insurance, trauma insurance, total and permanent disability insurance, income protection. So if you want to include these in your expenses, please go ahead and do so. Maintenance is another big one that a lot of people miss out on. It's not something that comes up as a regular monthly cost. It generally all comes at once, such as a hot water service breaking down. I always factor this into my monthly cash flow expenses just so I'm prepared for a worst case scenario. And Trust me, these worst case scenarios do come, and when they do, I don't feel so bad about them because I've already accounted for them in my expenses. The absolute minimum is $2,000 a year here, or $167 per month, and this should scale with larger and more prestigious properties. Note, this is not to be confused with the maintenance and repair costs stated in your strata budget. This should be separate, specific to your individual property. Land tax is another big cost depending on the value of land that you hold and which state it's in. You'll have to check out the local state government's land tax calculation tables to figure out an exact cost. However, this could range anywhere between a few $100s to a few thousand. Water, drainage, and sewer costs are another expense that you'll have to factor in on a case-by-case basis. This cost varies depending on which water provider that the dwelling sits under, and in some cases you can actually charge this to the tenant if the property contains the proper water efficiency methods. If you're going down a different strategy such as short-term rental accommodation, then you'd want to factor in that full cost into your expenses, which if you ask the agent or check out the contract of sale, it should give you the previous year's total costs. Speaking of some other additional expenses you should factor in if you're using a different strategy that requires you to pay the day-to-day bills include electricity, gas, and internet, all at a minimum of $80 each per month. Accounting fees are something that can creep up too. It's very important to seek professional taxation and accounting advice, and at the very minimum I'd be including the cost of doing your tax return here. I always break this up into a monthly cost that goes onto my expense cash flow, even if it's just $20. Another rare expense for some investors is ASIC fees, and if you hold a property under another legal entity such as a trust, there are initial and ongoing expenses that should be factored in the holding costs of the property. This could be as small as $40 a month, but it all adds up. Overall, if you don't have the exact figures for all of these expense items, a good rule of thumb is to just calculate your holding costs at 1.5% of the purchase price of your property. And if you're forecasting the future expenses, increase this base amount by 3% per annum. So if you had a $500,000 property, your 1.5% calculated holding costs would be $7,500 per year, or $625 a month, on top of your loan repayments. And I think this is the bulk of expenses that many forget to factor in. It's just not a rental income minus mortgage repayment amount. I want to know what other expenses you guys factor in your holding cost calculations. Leave them down in the comment section below. As always, seek your own professional financial, legal, taxation, and property investing advice for your current situation. These videos are just my opinion and are general in nature and should never be considered as personal advice. If you're keen for more content, don't forget to subscribe and smash that notification button so you don't miss a video. And until next time, happy house hunting.